Alright, what's going on, guys? Boy Thrax, and I'm here to teach you a painful lesson that has helped me a lot throughout my trading journey. And I've been trading IFVGs for probably 2 years coming up, maybe a little bit longer. Um, so yeah, let's get right into the video. So I think one of the biggest problems that I had trading IFVGs was my liquidity levels. And not that I didn't understand liquidity, it was more or less me trying to find, and what I didn't know was, you know, below A plus setups. So normally, if I was choosing or waiting for an IFVG, I'd wait for example, a 5 minute fair value gap to get tapped into, and then wait for an IFVG to get out of it. Reverse. Um, this did nothing but cloud my mind with confusion, and didn't make me that confident in the market. So a thing that I did change to make my strategy and my trading have a little bit more discipline and routine was the liquidity levels that I was focusing on a reversal out of. So example, obviously you can see here that we have 1 hour and 4 hour fair value gaps, 1 hour and 4 hour high and lows, London and Asia high and lows, previous day high and previous day lows, and the 50% level tap of the daily range. Now, once I waited for these, my trading became a lot easier. I had structure, and I think all in all, it stopped me from over trading and essentially just sabotaging my trading in the long run. So basically, every time I hop in the charts every day, I would go to the 15-minute just to get a bigger view on the day and the sessions. So let me just oh, get rid of this quick. Look a better day, because last trading day wasn't the greatest example to show. So play. Uh, so this is what I do every day when I'm hopping on the charts. This down here. So now we're gonna mark out London and Asia high and lows. Get this high, and then obviously you can see Asia high and Asia lows were already swept. So we'll leave it like that. Now since we have London low swept, Asia low swept, the only other liquidity for overnight session highs and lows is just a London high. Now we're going to go to the 4 hour. We see gaps, which obviously I'm going to keep in mind, but I'm not going to worry about those right now because we're still in a 4 hour candle. So I'm going to drop down to the 1 hour. Now, for instance, okay, we see a 1 hour low. Mark that out. And then obviously we got bigger gaps down here, which you could potentially see a reversal off of. But anyways, so that's like the daily range, what I'm really focused about. And then if we end up breaking those and not having a reversal, then I'll look for other higher liquidity points out, for more 4 hours or 1 hour swing highs and swing lows, and previous day high and previous day low. So anyways, we have the overnight high and low, which is London high, and then the 1 hour low that we made. How long ago was that? Based on this, a couple hours ago. We'll go back to the 15-minute so you can kind of have a good view of everything. I'm gonna grab my fib from the bottom where the 1 hour low is to the top of the daily range so far was London high, and now we got the 50% level. Now, basically, when market opens, now I don't trading like this. You don't really need a daily bias. You're basically just using what you have and reacting to the market with confidence. So, say if price were to, there we go. So if we were bullish right off open, let's say I'm not gonna fast forward in time. I'm just gonna show you this is how I would trade. So we open up. Now normally I don't take trades off of open because it's risky and it's a gamble and it's super volatile. So I'll wait a little bit till price comes down, then we'll see what we get. So say price comes down, sweeps hourly lows, and dips into the 1 hour fair value gap, and then we end up getting a bounce out. I would end up taking along if I got an IFVG on the 1 minute, 2 minute, 3 minute, maybe even the 30-second, and then possibly target the 50% level because the 50% level is a good spot of um, resistance, and price likes to usually bounce off of it. So that's usually what I would target. Or say price came down, we didn't get an entry, price would have come up to the 50% level, and we got a bounce, like a clean bounce out, a nice rejection, and we got an IFVG out of it, then I'm going to target other lows back down. Now, if we didn't get any of that, say price was like, okay, well, price opened up, or market opened up, we hit the hourly gap after sweeping hourly lows, there was nothing, and we ripped past the 50% level, and we say we hit London high. Now, this would be a good spot to look for another reversal back down into the 50, because like I said, the 50% level, price likes to bounce out of it. And I would either target here, maybe take partials, and maybe try to ride it down lower. Or you can even simply wait, say, for instance, okay, we bounced down, there was nothing here. Market rips through the 50% level, and it rejected the London high, and still nothing there. Now we're back at the 50% level, where you can potentially look for another reversal to target higher, maybe take higher on a 1-to-1 or other higher of liquidity, as in the 1 hour high, 4 hour high, or other higher time frame or FEG. Now this might be a little bit confusing because the more you trade it like this, the easier it's going to come, and so it might be not coming across as should. But now let's do another example. Say price opens up, rips through the 50, and say we have a nice rejection off of the London low or London high. We can either take an entry and then target the 50%, or maybe if you're lucky, you take partials at the 50% and then you wanted to hold to the 1 hour low, you could hold it. Or say, for instance, again, market rips, it's nothing at London high, market dumps right through the 50% level, and now we got a potential valid long entries on the 1 hour swing low that was created. And then you could target back on the 50 and maybe even take partials there, or even hold even higher to other draws in liquidity, like I said, the 1 hour high or the 4 hour high. You honestly don't need 15-minute highs and lows. You don't need to worry about, the 5-minute highs and lows and stuff like that. Obviously, if you're going to long into say a 5-minute gap, yeah, you want to be careful and take partials, or maybe even move stop to break even. So let's find another example. 3 minutes. Let's go here. All right, so here on the 15-minute, got London low, London low. Now here we already, what time is this? 8:30. So at 8:30 we swept London high. We don't have Asia high or Asia low because they already been taken out. Now, since we got London low, which is low a day already. Now here, second. All right, here we have previous day high, and then we have previous day low down here. So as I'm just that, there's 3 spots of liquidity where price may reverse to, or reverse out of, sorry. So now look at, we go to the 4 hour. That previous day, so why does it do? 1 second. Not previous day high, it's previous day low. So now we go to the 4 hour. Previous day low that was marked down here is a 4 hour low, and it's also in a 4 hour gap, which is a super strong confluence for a reversal. Now we go back to the 15. Now we got a couple points of liquidity, and then the last thing we'll do after marking out the liquidity, the daily range with the 50% in the middle. Now this is how I would do it. Let's bigger for you. Hold on, let's give it forward. All right, so let's go down to 1 minute. Now on the chart, time is 9:29. We're gonna play forward a little bit. Now, right there, we tapped the 50% level. Go to the 2 minute. And if you know anything about IFVGs, wait for 8 to 15 point range gaps. Otherwise, it's probably going to be low probability. All right, for example, you know what? Well, for the video's sake, we'll take this one right here. So look at aftermarket open. We swept. We sweep. Did sweep hourly highs right here. Since it was so close to market open, I'm not worried about those. We'll just go 1 hour highs. And then back to the 2 minute. Market dumps. Specs the 50% level so perfect. See, the bodies never close below, but the wicks, we wick into it. And then we get 2 minute. Two-minute IFVG, which was closed above nicely. And then we go long. This would be Pick a target. 930 highs. Alright, so I'm gonna play forward. Boom. There we go. Over there. And it's that simple. Gotta wait for the, like I said, the overnight highs and lows, the 1 hour, 4 hour highs and lows, or the 50% tap. Like that would have been a trade and done for the day. So hope this somewhat makes things a little bit easier for you, and you're not struggling so much with just trying to take every inversion fair value gap out of every mid high time frame fair value gap. All right, so that's it. That's done for the video today, and yeah, like and subscribe for more. Um, yeah, and we'll come back with another lesson, and I will try to help you guys out as much as possible. All right, peace.